Choosing between day trading and swing trading is less a question of strategy and more a question of identity temperament and the kind of life you want trading to fit into. Trading literature often frames this choice as technical comparing, time frames, indicators, and holding periods. Yet traders who survive long enough know that the real difference lies elsewhere. The wrong style will exhaust you, even if it works on paper, while the right style can feel sustainable, even through drawdowns. Understanding this distinction early can save years of frustration and unnecessary loss. Day trading appeals to those drawn to immediacy. Trades are opened and closed within the same session, sometimes within minutes. There is no overnight risk, no sleeping with open positions, no wondering what news might do before the next open. This immediacy creates a sense of control, but it also demands intense focus. Day trading compresses decision-making into short bursts, requiring rapid pattern recognition, emotional regulation under pressure, and the ability to recover quickly from mistakes. The literature is clear that day trading is not difficult because it is fast, but because it is mentally relentless. Each session is a performance, and there is little room to drift. The lifestyle demands of day trading are often underestimated. Markets must be watched in real time. Missed focus often means missed opportunity or poorly managed risk. This makes day trading difficult to combine with full-time jobs or unpredictable schedules. It rewards those who thrive on routine, who can show up consistently during specific market hours, and who recover quickly from emotional swings. Traders who struggle with impulsivity or fatigue often find day trading amplifies their weaknesses rather than refining their strengths. Swing trading, by contrast, operates at a slower rhythm. Trades are held for days or weeks, allowing patterns to develop over time. Decisions are fewer, but patience is tested differently. Swing traders must tolerate uncertainty between sessions, hold positions through overnight news, and resist the urge to micromanage trades. Trading literature often notes that swing trading shifts the challenge from speed to restraint. The difficulty lies not in execution, but in waiting and trusting the plan once a trade is placed. From a lifestyle perspective, swing trading offers more flexibility. Charts can be reviewed outside market hours, orders planned in advance, and decisions made with less time pressure. This makes it more compatible with other responsibilities. However, this flexibility comes with emotional challenges. Swing traders must live with open risk for longer periods, which can trigger doubt, second-guessing, and the temptation to intervene prematurely. Those who crave constant feedback often struggle here, mistaking quiet for danger. Risk management also differs subtly between the two styles. Day traders often use tighter stops and smaller targets, relying on frequency and precision. Swing traders typically accept wider stops in exchange for larger potential moves. Neither approach is inherently safer. Safety comes from alignment. A trader who is uncomfortable holding risk overnight will sabotage swing trades. A trader who loses focus during fast decision-making will sabotage day trades. The literature consistently emphasizes that mismatch between personality and time frame is one of the most common causes of failure. Another important distinction lies in emotional load. Day trading produces frequent wins and losses, creating constant emotional stimulation. This suits traders who can reset quickly and do not carry outcomes forward. Swing trading produces fewer but larger emotional events. One trade can dominate attention for days. Traders who ruminate or obsess often find this draining. Understanding how your mind processes stress and uncertainty is more important than understanding chart patterns when choosing between these styles. Experience level also plays a role, though not in the way many expect. Beginners often gravitate toward day trading because of its excitement and the promise of quick feedback. Yet this feedback can be misleading. Rapid losses and wins make it difficult to distinguish skill from randomness. Swing trading, while slower, often provides clearer learning signals because patterns and outcomes unfold over time. Many seasoned traders suggest starting slower, then speeding up only if temperament allows. Ultimately, the question of day trading versus swing trading is a question of fit. Which style supports your discipline rather than testing it constantly? Which one allows you to follow rules consistently rather than fighting your own impulses? The right choice will not feel easy, but it will feel sustainable. It will challenge you without overwhelming you, and it will integrate into your life rather than compete with it. And it is precisely at this point when you stop asking which style is more profitable and start asking which style you can execute. With patience, clarity, and consistency over hundreds of trades, that the answer begins to reveal itself, and the comparison between day trading and swing trading shifts from a technical debate into a deeply personal decision about how you want to engage with risk time and yourself as a trader. Because once sustainability becomes the standard, the comparison between day trading and swing trading becomes clearer and far less ideological. What matters now is not how impressive the style sounds, but how it behaves when life intrudes, when energy dips, when confidence wavers, and when markets stop cooperating. Trading literature written by long-term practitioners often notes that most traders do not fail because they chose the wrong strategy, but because they chose a style that required them to be someone they weren't day after day until resistance turned into exhaustion. As you examine both paths, honestly, patterns begin to emerge. Traders who succeed in day trading often describe a love for structure and immediacy. They enjoy the clear start and end of each session, the feeling of closing the book at the end of the day. They recover quickly from losses because nothing lingers overnight. Their discipline shows up as presence. When they are focused, they perform well. When they are not, they know quickly and step aside. Day trading rewards this self-awareness and punishes denial. It demands respect for energy routine and mental freshness above all else. Swing traders, on the other hand, tend to value perspective over intensity. They are comfortable letting trades breathe and allowing time to do some of the work. Their discipline shows up as restraint. They resist the urge to interfere, to check constantly, to react to every piece of information. Swing trading rewards trust in process and patience under ambiguity. It punishes the need for control. Traders who do well here often have an easier time detaching from short-term noise, but a harder time sitting with open risk when markets move slowly or unexpectedly. There is also a hidden middle ground that trading literature rarely emphasizes enough. Many traders evolve over time. Some begin as day traders and move into swing trading as they seek balance. Others start with swing trading to learn patience, and later add intraday activity when focus and structure improve. This evolution is not a failure of commitment, but a sign of self-knowledge. The right style today may not be the right style forever. What matters is remaining honest about what your current life energy and temperament can support. Another overlooked factor is how each style interacts with learning. Day trading accelerates feedback, but can blur cause and effect. Swing trading slows feedback, but often clarifies it. Early in a trader's development, clarity may be more valuable than speed. Later, once discipline is ingrained, speed may become manageable. Trading literature suggests that many frustrations attributed to bad markets are actually learning mismatches between trader and time frame. Risk tolerance also matures differently in each style. Day traders learn to accept frequent small losses. Swing traders learn to accept fewer, deeper periods of uncertainty. Neither is easier. They simply stress different psychological muscles. The question is not which discomfort you prefer, but which discomfort you can handle without bending rules. The style that allows you to stay disciplined during discomfort is the one that deserves your attention. Ultimately, choosing between day trading and swing trading is an exercise in self-respect. It requires admitting limits, acknowledging preferences, and letting go of the idea that there is a universally superior approach. The market does not reward versatility for its own sake. It rewards alignment. When your trading style aligns with your life, your temperament and your capacity for focused discipline becomes simpler, and progress becomes steadier. If this reflection helped you see the choice between day trading and swing trading more clearly, consider subscribing to continue exploring the psychological foundations of sustainable trading, and leave a comment sharing which style you feel drawn to now and what part of your personality influenced that choice.